Last week, as we were looking for houses for clients, I came across two homes that I have to share with you. Under $100,000 less than what they bought it for. They bought it for around $630,000, and now they have it under contract, contingent on the lender approving selling it short at $525,000. What is a short sale? Essentially what it is hey, I bought this house at $600,000. It's now only worth $500,000. Hey, Mr. Lender, I can't make my payments anymore. Can I sell my house for $100,000 less than what I owe you? And the bank has to say, we'll sell it for this, or we'll sell it for $550, whatever it may be. And then if the lender agrees to it, then the buyer can get it. I just wonder if they fell for that trap and they got caught up in the emotions of, I want to be a homeowner, instead of just putting emotions aside and thinking logically and saying, okay, I can afford this. I can afford this no matter what comes. I can do this. The biggest misconception is a short sale is short. Actually, it's not short. It takes time. Sometimes it takes 30, 40, 90 days for a lender to approve selling it short. When you hear a short sale, the seller is selling it for less than what it's worth, and you still have to wait for the lender to approve how short they're gonna sell it for. This other house that really caught my attention was currently was listed at $380,000 last week. Has an accepted offer on it. They bought it at the beginning of 2022 for $490,000. Now they're taking a $100,000 loss, or the bank is taking a $100,000 loss. Is the bank gonna take that loss? I don't know. Is this a state of the whole housing market? That's what I wanna know. Let's take a look at what CoreLogic says. And I think when we see October and November stats, these are actually gonna rise from what we saw. What they're saying is that the 30 days or more of delinquent mortgage rates have flatlined in the month of September, 2.8% to 2.8%. The 30 to 60 days actually jumped by 0.3%, from 1.2% to 1.5%. That doesn't seem a drastic change, but keep in mind, September was before the student loan forbearances came to an end. I really want you guys to understand is home prices have been declining. We've been talking about this for a while. And if these home prices continue to decline, then we're gonna see more and more short sales, just like the two that I showed you at the beginning of this video. We're gonna see more of those come to the market. The reason why it's important to follow these delinquencies is because people who are delinquent or can't make their payments and they don't have value in their homes, they're gonna start short selling or foreclosing on their house. According to CoreLogic, their home price index that just came out, they're seeing the home prices nationally have increased 4.7% year over year. But that's not what it's like throughout the nation. Again, that's taking every single state from the lows to the highs and combining them together. According to this, Idaho, Montana, Texas, Utah all saw price declines. But as long as the states continually to see price declines, then those people are going to be more and more at risk of doing a short sale. In this article, it says that the states that have the highest increase year over year, Connecticut, New Jersey, Rhode Island. Connecticut's at 10%. New Jersey's at 9.9%, and Rhode Island's at 9.7%. And that's why it's so important that you don't just take these national averages, right? There's people out there that are constantly touting, like, we're up 4.7% year over year, but they're looking at the nation. And you can't just look at the nation. You have to go at state specific and even closer to the county or city specific, or the metro area specific. Miami has had the biggest increase year over year at 8.8%, where other areas like Houston has 1.1% according to the home price index, Boston has 4.5, Denver 1.8. These are what they're saying, the metros that are going to see the highest risk of price declines coming in the next 12 months. According to them, Fort Myers is a very high risk or very high probability, a 50 to 75% confidence score that these home prices are going to decline. West Palm Beach, Florida is sitting there. Daytona Beach, Florida, 3 out of the 5 top markets that are at the risk of home price declines are sitting in Florida. If you're watching this and you're in Florida, let me know, what are you seeing in your area? What do you see? Do you see home prices increasing or declining? According to this Bloomberg article, $1.5 trillion worth of commercial loans are going to have to be refinanced by the end of 2025. And according to the Fed Watch tool, they think the Fed is going to start cutting rates by May of 2024. Do you think they're going to start cutting rates? Do you think our economy is booming enough or inflation is under control enough for them to start cutting? I don't think so, but what do you think? The CEO of Spotify just came out and said that they're going to cut 1,500 more jobs. That's after we've already seen Meta layoffs, Salesforce layoffs, Amazon layoffs. We're seeing another big tech company that's willing to cut off 1,500 jobs. On top of that, we have Bank of America. Bank of America has shuttered nearly 150 branches nationwide this year. But if the banking sector is doing good, if the housing market is doing so good, why would Bank of America shut 150 branches? Why would Wells Fargo shut 20 branches? As these companies are doing layoffs, I just want to jump into something that the CoreLogic article says. We were at the highest unemployment rate since 2022. But let's just go back and look at this chart. So this is every single month, the unemployment rate. And you can see that right now we're hovering right at that 3.9%. The last time we saw 3.9 was at the beginning, January of 2020. 2022. If we go back to 2021, people were still getting unemployment. If we go back to the beginning of 2020, before everything shut down, we were sitting right at the 3.5% unemployment rate. Then it jumped from 4.4 and then 14.7. So I just want to remind you that if unemployment rate continues to rise, we are going to see a lot of pain when we're talking about consumer debt being the highest it's ever been. We're talking about commercial loans, $1.5 trillion worth of commercial loans having to be refinanced in the year of 2025. We're seeing people losing their homes or not losing value in their homes so that they can no longer sell it. So just be wise, be careful. The New York Fed quarterly announced that in Q3 of 2023, we're at a record high of $17.29 trillion of household debt. According to the Experian, the average total consumer household debt is sitting right around $103,000. That is a staggering number. Pre-pandemic, the average total consumer debt was at $92,000. We're 11% higher than what we were pre-pandemic for the average debt. The problem with that is if we're going into this deflationary market where the car market is crashing, the housing market is crashing, the things that people went out and bought is no longer worth what they're at, how are they going to get out from underneath them? How are they going to be able to sell these things and get out from debt? Housing market and the car market and the recreational market, all of these markets are crashing and they're going to be stuck. When we talk about the very beginning of the short sales because people couldn't make their payments, we're talking about the foreclosure rate. Yes, it's low, but it's on the rise. And now we're talking about the household consumer debt is just at a record high. What is coming next? Well, I think we're going to see a lot more of these short sales. I think we're going to see a lot more of these foreclosures coming to the market. Auto loans and the hardship has increased for people who are in hardship that have auto loan in September. It's increased September of 2023 to 4.3% of auto loans that were in hardship, and the previous year was at 3.6. These stats and these numbers are before the student loan forbearance came to an end, and they are before some of the home loan forbearances have come to the end. And now we are going to see all this collide, come together. You throw in the commercial loan, and this is just a disaster waiting to happen. I know sometimes people get excited when they see, oh my gosh, this is a short sale. This has got to be a good deal. And it doesn't necessarily mean that you're going to be able to go in and buy the house in 30 days. You might have to wait 3 months, 4 months, 6 months before you actually even be able to walk inside the house and call it your own. So don't get so excited and think that, oh, it's a short sale, it's a great deal. A different house could be a better deal coming on the market sooner. As more hardships come, more things get listed, or the cars just kind of overflowing in the lots, because that is a telltale sign that the market is not doing well and people are having to unload these $50,000, $80,000, $100,000 vehicles just to make ends meet. If you are thinking about getting in the housing market in 2023 or in 2024, just make sure you're in it for the long haul. You can't go in there and expect to just turn around and make a profit. You have to have the mindset of, I'm going to buy this, probably be stuck in it for 10 years, because as this market continues to grind its way down, and it's been a grind. The thing is, people, I think, expected, and I'm guilty of it too, I expected the housing market to crash a lot faster than what we have seen. Now, we've seen a drastic cut in home prices, but this is a grinding downward trend. It's not going to be a quick drop because of the low inventory. Prices are still coming down, at least in our area and in other areas throughout the Northwest, some areas in the South. Make sure you have that savings set aside for in case AC or furnace goes out. As I learned from experience, those things cost a lot of money to replace, and if you don't have a nest egg saved for the rainy day, it might be in trouble, and I don't want you to be one of those that have to short sell or foreclose on your house. But one thing that it has just kind of made this a grind in the downward trend is, yeah, we do have some low inventory, and we have some sellers that are stubborn, that aren't willing to sell it for what they want. They're sitting on the market 3, 4, 5 months until finally they get desperate enough to, hey, boom, I'm gonna sell it. Like some of these short sales that I didn't bring up, they were sitting on the market for 100 days, 150 days, and then finally they just had to drop it enough to get somebody in there and buy it or try to make an offer on it to save them from having to foreclose on a house. Although I thought it would be a lot faster, I still see people getting into mortgages on a 3-bedroom, 2-bath house in not necessarily the best area and having to pay $3,000 to $4,000 a month for that house when you could go out and you could rent that house for $1,500. You could rent it for $1,800 and you would be ahead $1,200 a month or more if you were just to rent it instead of buying it. And I know what some of you guys are thinking. You're thinking, well, if I'm renting, then I'm paying my landlord's mortgage, which sure, yeah, you are paying your landlord's mortgage, but you're not paying it forever. Listen, you're not paying for, I'm not saying go be a renter forever. Now, there are people that makes sense and they're going to be a renter for the rest of their life, and that's good for them because they like to move around. Imagine paying your landlord's mortgage for 1 year or 2 years and that saving you $100,000 and losing that property value. And then you can go out and you can buy a house that makes more sense for your monthly payment, and you are walking into a more equitable position because you waited and home prices have declined another 10%. Don't let these lenders or these real estate agents that try to push you, oh, well, you're paying somebody else's mortgage by renting. Don't let them fall into that trap, because if you can't make your payment, are you going to be able to call them and say, hey, Mr. Agent or Mrs. Agent or Mr. or Mrs. Lender, I can't make my payment. Will you make it for me? Because guess what? They're not. They're just going to get their commission, move on to the next thing, and we don't want you to fall into that trap. Please, 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 if you're getting into the market, this is a time that you really need to think and do your homework. We have a client right now that likes a house. They've been thinking about this house for 3 weeks and it's still available. But the nice thing is they have time to think. There's not this emotional push to say, hey, you got to buy this because you know what? You just have to buy this. No, no, no. We want our clients to think, to process, to make sure this is where they want to be, because they might be stuck there for 10 or more years until the market comes back up and they can sell it for at least break even or sell it for a profit. Make sure you're thinking, you don't let your emotions get in the way, and you're making the right decision because you've thought about it, you've done your homework, and you followed our channel. If you have questions about short sales or foreclosures, or maybe you're in this situation, shoot us an email below and we'll get back to you as soon as we can. Now, we may not be able to get back to you within the hour that you send it, but we will get back to you, and we just ask for your patience.